Good day, investors. This is Manish Shah, Co-Fund Manager, Upper Crust Wealth PMS, giving market and portfolio outlook for the month of September 2022. Indian equities surged by approximately 3.5% in the month of August, following a strong rebound of around 9% in the earlier month of July. Mid caps and small caps outperformed the large caps. During the month, the market movement was impacted by strong FPI buying during the month, easing of US inflation, softening of commodity prices, easing of supply chain, hardening of US yields, hawkish comments by US Fed governor, and hike in policy rates by RBI, etc. Narrative by the US Fed from the Jackson Hole was that it will continue to hike the rates, and pause to the hiking of rates could now be seen in early 2023 only. But despite of the highest inflation in the history of US, its balance sheet is not shrinking. Corporate margins are at highs since 1950s in the US. Jobs data continue to remain promising in US. Our new estimates expect rates in US to go up to 4 to 4.25% till May 23 and then can signal a down cycle. In China, households have boycotted the mortgage payments. This may be pointing to some larger disturbances ahead. Unemployment has surged there, and GDP growth estimates for the 2022 is 3 to 4%, which is lowest since many years. Here in India, FIIs were the net buyers of Indian equities in the August 2022, and DIIs, however, were the net sellers worth 0.9 billion in the USD. Net inflows to the mutual funds in July 22 stood at approximately 17,000 crores. Q1 FY23 GDP came at 13.5%, which was slightly lower than the RBI estimates, but India was the only economy in the world which is growing at around 7% growth rate. Indian manufacturers are benefiting from the Europe's energy stress and China plus one strategy. Earnings and results of infrastructure, utilities, bank and NBFCs were better than expected, while that of cement, consumer staples, oil and gas and metals were largely in line with the expectations. Results of IT, consumer durables, auto and pharma were below the expectations. Looking at US, Europe or China, if the global pie shrinks, then India's export may also slow down. Thus, global sluggishness calls for the downside to India's growth. In view of this, markets hold promise over the medium to long term. One should expect moderate returns in the near term. It is premature to infer that current volatility in the markets has ended. Our outlook on Indian corporate earning is that they have turned the corner and are likely to trend higher in the medium term. Our portfolios have consistent compounders that have a room for higher than market average earning growth as well as possibilities for price re-ratings. We continue to have overweight in industrials, consumption, chemicals, auto and construction in most of our portfolios. Current valuations seems reasonable and do not leave much room for any negative developments or disappointments. In our view, quality mid caps and small caps will continue to outperform its large cap peers. Investors are advised to stick to their long-term asset allocation plan. That's all for today. Thank you so much and wish you all the best.